Friday, October 10th. Your boy here's a little out of it today. My Apple sleep score was like 25 last night. Just so you know, I've been sleeping with the Apple Watch Ultra, and I'll take a picture of all my new Apple devices because I'm actually up to date on everything Apple. I'm an Apple fanboy. Yes, I own the stock. Yes, I own everything. But today's show is going to be a little bit downtrodden. I was hoping for a big kind of energetic show to head into the weekend. But I think you're going to enjoy this because we're going to start out the show by showing you a rabbit hole in TrendSpider. This isn't pre-planned. This is just, hey, we're sitting here. Let's look at what we can find in TrendSpider. I will show you how TrendSpider's incorporating Kalshi, the prediction markets into. You want to predict when the government's going to shut down? What are the prediction markets saying? Put it on your charts. Do all of that. And we'll go over the market because if you want to invest from 1 year from today, if you invest today, where will you be in 1 year? Well, let's put on our little, thinking caps and go through that. Nvidia, it may still be cheap. They just got a $450 price target. So we'll go over the math on that one. A stock that's up 57% in 1 month. I will show you that one. Huge news for Netflix. An interesting Anduril defense tie-in. If you don't know Anduril, it's the #1 private defense company that Palmer Luckey is in charge of, and everybody's dying to invest in it, but it's a private company. There is a company that is doing undersea drones that will actually tie in. I saw the pitch yesterday. I kind of like it. Another stock that's up like 400% in a week. We'll go over that one because and earnings, it's starting out pretty good. So like I said, earnings season was coming up. It's starting out pretty well. But let's take a look at TrendSpider first, okay? Because TrendSpider sent me an email yesterday, and they are having a flash sale this weekend. So again, I point people towards the advanced tier. Why? Because when you have these flash sales, they give you 52 trainings per year. That's one per week, okay? So let's add this up in our brains. Go 117 divided by 4 because there's 4 weeks in a month. 52 weeks in a year. You can even do the yearly and divide it by 52. And that's how much you're paying for the training per training. It's an hour one-on-one with a product expert. So I didn't have this when I started with TrendSpider. I wish they had this opportunity. If it's within your budget, I would say there. But if you just want the standard, you can get the standard. Again, sign up for my annual plan through Linktree. Click on Linktree. You have to go through this link because to get my 4-hour algorithm, you need to be under my affiliate program with an annual subscription. You can try this out for the weekend. I'm going to give you some ideas right now because if you just go here to Google and you type in TrendSpider store, okay, there is a store where you can browse everything. They have strategies, they have scanners, they have indicators. Even the Kalshi market, you have Minaveri, VCP, you have the turtle traders. You have all of these additional things that you can put. The hackathon, which had a bunch, 82 assets, 82 things were developed. Okay? If you just want to do something and you find a scanner, let's look at that. Well, they have an EMA 821 scanner. That's one that I would look at, but it's an indicator. I'm not going to import it into my system because then I screw up my view of what I have on target. And I've shown this before. I can't do it. But don't think that you need my 4-hour algorithm. You can get a week-long or a 2-week trial for $5. Or I'm sorry, it's $9 for 14 days. $9 for 14 days. So get the trial. See if you like it. And if you don't, no harm, no foul. It's literally the price of a burrito at Chipotle. But I want to show you kind of something that you could do, okay? So let's go up here in the upper right. And again, I have all the watch lists that I share with you here. But say you just want to find a scanner, okay? Let's just go and look at scanners. I'm going to type in today's gainers right there, 10% or more. On the Russell 2000 index. Remember, small caps are the ones that will actually gain. Well, if you're interested in trading like this, you can do it. You can use TrendSpider to do it. Now, this is in the 4-hour algorithm. The 4-hour algorithm got you in here at $6.73. But if you're looking for today's gainers, you're probably looking at trading at a shorter time frame, okay? And you can. Look, if you were in, like, say you got up this morning at 4 o'clock in the morning, this was trading at 872. You don't have any real clear. But if you were looking at this in the afternoon yesterday and you saw this one take off because there might be news, I don't know, diversified holdings of beneficial index. Let's just go see if Cody has any news on it from yesterday. Let's see. Compass? No, there's nothing. There's literally nothing. It's a sell. It would absolutely be a trade. But you can see this one was trading at $7.53. You can set up an alert for any stock that moves on a 5-minute chart, 5, 10, 15%. You can set up that alert for yourself and just have it emailed to you. So there are tons of things that you can do. And like I said, go over here. You can import any of these scanners. You can even import all of these strategies. So you have strategies built for Apple. Look at that. Performance 22%. You win 60% of the time on Apple, and you can change the symbol, but you understanding what the formula is, it will help you. This is a Bollinger Band breakout, long 1-hour strategy over 1 hour. This wins 2,134% on Tesla. So when you import these things in, just understand, you can look at these things and just say, interesting. Or you can set yourself up a strategy like the 4-hour, which is what I like. And it works really, really well on the stocks that I trade. So if I just go back here and look at the core investments by Gary, and I look at Apple, the historic performance of Apple over time, it doesn't do well within the last 2 years. But when I developed this in 2000, it worked in 2020. It worked really, really well. And if you sign up for an annual plan and you don't get an email from me, email me. My email address is up here in the upper right, okay? Sometimes you don't fall within my my affiliate program with TrendSpider. And we've been seeing that a little bit. So just email me, but understand this is a huge program and it's an enormous sale. So take advantage of it because it's only 2 days. But that's the type of thing you can do. You can run down that type of rabbit hole. And here we go, Kalshi. Prediction markets are now included. And you can import all of these things. Kalshi trending crypto, Kalshi trending financials, Kalshi trending companies, trending sports, trending politics, trending custom. A lot of this is stuff that you can do. And again, you try with Kalshi. With $40, you can sign up with Kalshi through TrendSpider, and they're going to give you $40 to actually use in the prediction markets. That's kind of nice. I haven't tried it. Maybe I'm going to go try it. Maybe over the weekend with the NFL. But let's look at the markets now, because we're talking about short-term trading there in TrendSpider. I use it for long-term trading. And my 4-hour is long-term. I consider it a long-term guide. I don't consider that one a short-term trading platform. I consider it a long-term. But here you go. Ryan tells you the S&P is up more than 35% within the last 6 months. One of the best 6 months in the history of the market. The 5 other times this has happened since 1950s, stocks were higher a year later, every time, every single time, every time. The average 13%, the median 10%. All years since 1950, 9.2 and 10.4. So again, if you're interested in trading in the market, you can trade. But I continue to tell you, buy and hold good companies with good products, with good profits and good management. That is a far better way to make money in the market. You just need to identify these things. And if you get scared out, again, use something like the 4-hour algorithm. I just sold a stock that is in Alpha Picks that I added back in August. I added quite a bit. Had a 28% run since August. I trimmed it. I'm still overweight on it, but I've identified technical trading strategies that I like. And if you think we're in a bubble, guess what? Microsoft's forecast shows that data center demand, if you don't know just economics, okay, there's a thing called supply and demand. Go and have a conversation with AI about supply and demand and ask it about the dynamics of supply and demand. When you have too much demand and not enough supply, what happens? Prices go up. That's a simple explanation of inflation. When the supply chain shrank and we didn't have enough supply, but demand even stayed the same or even went up, you had inflation. That's what's going on with data centers right now. Microsoft is saying that the demand is outpacing the actual supply. Guess who that's good for? IREN. Guess who that's good for? Energy companies. Guess who that's good for? Microsoft, Amazon, the hyperscalers. It's good, and it's good for the economy. Everything seems to be running on AI. And if demand is that high, then they're going to have to build capacity with, again, points to Dell, points to those types of situations. It's an AI market. Okay, and I just talked about energy. Here's the elephant in the room. Alphabet, Amazon, Meta, Microsoft, OpenAI have announced $800 billion in commitments for new data centers. Where's the electricity coming from? Electricity has gone up 35% in the US since this was announced. FYI, nuclear is 10 plus years away. So while you're betting on your Oklos and your SMR, and you're putting money into CCJ, which is Cameco, it's not a bad idea, but where's the electricity coming from? There needs to be something out there. And FYI, I think some of these utilities, like Constellation Energy, like Southern Company, like Duke, find some that you like, because they're going to raise prices. This is the inflation that you're going to hear about. And we're on day 9 of government shutdown. I mean, there's no countdown here. There's nobody even talking about it. And the fear and greed index is at 49. Nobody's greedy. You know, we're at all-time highs. Everybody's screaming valuation is nuts. You know, I should get out of the market. That's when you want to buy. One of the things that Steve Kress and I talked about yesterday was April. And nothing changed in April about the fundamentals of the stocks. And when he wrote that letter, and I credited him yesterday, when he wrote the letter to Alpha Pick subscribers in April and said nothing has changed about the fundamentals of the stocks that we own. They are getting beaten, and they were getting beaten down larger than the market. Okay, but he showed a great graph yesterday, and it's going to be included in the episode, of how Alpha Picks went down more, but it's been up historically more. So it had more room to drop. But when you get to that fear and extreme fear, remember what Warren Buffett says. Okay? He says, when other people are fearful, be greedy. When other people are greedy, be fearful. We're neutral right now. I'm very happy with the portfolio that I have. I'm trimming some. I'm adding to others. But I'm not getting scared out of this market because, again, the math makes sense. And speaking of math, Nvidia just got a $300 price target. And I heard this morning, I think there's a $400 price target out there. And Cantor says this is not a bubble. We are still early in the investment cycle. Put simply, Jensen and the team are focused and competitive as ever, and they are playing to win. We do not see a scenario where Nvidia fails to secure at least 75% of the AI accelerator market over time. If you look at Nvidia stock, and we go with this, okay? Nvidia stock in the 4-hour algorithm, it had you in here at 176. I will still say there is a support at 168, but if you just look at these previous all-time highs at 180, that looks like a support level that I could start buying at as well. If you just put this at 185, look, you pulled back there. That was through the summer. and then you took off. And then back here in October, the early October, October 7th, you pulled back there and then you took off again. If you look at a weekly chart, it does seem extended. Could we have a pullback? Absolutely, we could have a pullback. I would say if it's me, anything towards the 150, I'm loading up on this baby. Why? Well, let's just do the math. They also say $8 of earnings per share next year. Okay, next year. Put a 27 multiple, just times 8 by 27. That's a 27 multiple on next year. Okay, let me just see. What's 8 times 27?
The answer is 216.
That is next year's price. You're trading at 192 right now, 216. But let's just do the math. On 2027, what's 11 times 27?
The answer is 297.
There you go, 300. So if they're saying right now that their estimates are putting them at $11, there's your $300 price. And FYI, if you get a pullback to 150, you're doubling by 2027 with a 27 multiple. If you go and look at the multiple on Nvidia right now, let's just go and look at it again. Pull up your favorite tool. Mine is Seeking Alpha, but you're seeing right now it's trading at 42. There's a lot more earnings that are involved with just putting this at a 27 multiple. So again, that's the thing that you have to think about is, hey, these earnings are coming in. Nvidia, and yes, there's this whole rumor about these guys are just circling around, blah, blah, blah. Earnings are important this quarter because if the earnings start to slow down, like in Amazon, like Google, like Microsoft, then they don't have the money to actually put into some of this Nvidia stuff. So you'll see the market and the multiples start to come down. But let's talk about some individual stocks that I haven't talked about before. UiPath. This one was up 18% yesterday. I want to point out that it's up 57% in 1 month. Why? Well, it soared. Just look at the articles. It soars to 16-month high amid optimism around AI partnerships. Why? Because they're partnering with OpenAI, with Nvidia, and Snowflake, and Google. So again, it's an automation platform. Does this one make sense for you? Because right now, I can tell you from looking at this one, and I just look at the quant, well, the valuation's a D. This kind of run up in the valuation kind of makes it a bit stretched. Okay, growth is a D, which means it's not growing as much as it was before. Profitability, it's still an A. Momentum, it's been great. Okay, if you just look at momentum, 1 year it's up 48%. I'd be perfectly happy with that. 9 months it's up 37%. Again, I'd be perfectly happy with that. 6 months, 67%. 3 months, 38%. So again, I'd be perfectly happy with that. And when you look at revisions, 18 up, 0 down on earnings per share. So again, the quant rating is what you want to look at. It's nice and easy for me to look at this. And if I didn't know anything about this stock, then I've got tons of analysts. This one is just published this morning. He's downgrading it. Why he's a bit cautious. Go and read it. Again, the market decides what the price is for a stock. Analysts don't. But if you don't read the analysts and you don't understand it, you could get stuck holding the bag with something that's not good. So understand you have to go and do this type of research for a stock that you own. That's why I like premium and alpha picks. Okay, Seeking Alpha Premium allows me to do this research. It's nice and simple. Work smarter, not harder. I can do all my research within 10 or 15 minutes. And if I don't want to do the research, I've got a predetermined data-driven portfolio of stocks that outperform the S&P. And yesterday, I was just scrolling up and down my Alpha Picks list. I have a list here in TrendSpider that is Alpha Picks. I keep this up to date. And when I want to go through it, I just go through the entire portfolio there. I look at the charts and I say, ooh, this one's running. I got $10,000. Let me put it into this one. It's a strong buy in the quant, and I go and do my research. Alpha Picks, it's a great portfolio. I would not get Alpha Picks by itself. I would have the bundle. That's why I like the bundle. I think it's in this kind of market, this is simple as you can be to make back that subscription price. You don't even need Seeking Alpha to make back that subscription price. You don't need it. But in the market that may come up, if we are stretched, you may need Alpha Picks because Alpha Picks has outperformed again. Remember, this started in 2022. We had a down year in 2022. It was up in 2022. They do a good job, and I will release my discussion with Steve Kress coming up this weekend, and he talks all about it. Another one, Netflix. We've talked about this one because this one was getting that cancel kind of culture. FYI, conservatives are now the cancel culture party. They are. Netflix, it's a great stock. I'm going to be watching Netflix on Christmas with football. Got you a buy in the algorithm right here yesterday, $11.97. You're at $12.30 right now. Netflix is launching video games to TV screens. If you didn't know, on your phone, if you go to Netflix, you can play mobile games. Those games will now be able to be played on your Apple TV, on your Roku devices, through the Netflix app. So your Netflix subscription is now bringing you games. Imagine this over the holidays. You're at home and you want to play some Grand Theft Auto with Grandma. Yeah, you can play Grand Theft Auto with Grandma on your Apple TV, on your Roku device, through the Netflix app. I think this one is a great buy. Is it a fantastic buy? No, it's stretched on valuation when you look at this, but it has been stretched on valuation forever. And if you look at 6 months ago, the quant, it was A. Well, let's look at it 6 months. 6 months ago, this is up 30%. We're seeing a dip right now. Is this one going to move higher? Well, Wall Street says that it's worth $13.58. That's a 10% upside. And if you don't know about Netflix and you want to see about all the risks, this is what Seeking Alpha gives you. It gives you the full thing, the positive rated by the analyst, the concerns raised by the analyst. It gives you the full quant rating explanation specific to Netflix. And it was just generated on 10/6. So overnight, you get your own Wall Street analyst to write you reports on the stocks that you own. Netflix, it's one that I want to add to. And FYI, just got the buy here and I have confirmation. I'll probably be adding to this. It wins 59% of the time in TrendSpider. So that's how I add to this position. It's quite simple. Now, I was on Spaces yesterday. I wasn't speaking on Spaces. I was just listening to the Wolf podcast. And I heard this guy, Michael Sikan, and he was invited on to talk about his video here, okay? Here it is on Twitter. He kind of puts out there, he just put 70% of his portfolio. He was absolutely talking his book. But it made sense. And that person you see right there is Palmer Luckey. He has the #1 defense company and it's private. You can't invest in it right now. It is private. It's called Anduril. I don't exactly know what. But it is a defense company that is getting a lot of attention. And it's a drone company. Well, Anduril is starting their undersea drones. That's what this company does. Kraken Robotics. And you can invest in it. Yes, you can. There's a YouTube video on this one as well. Their revenue is growing by 56%. I liked the pitch. Now I went and I said, let me look at this up here on Seeking Alpha. And I go and look. Well, there's no Wall Street analyst covering it. There's no quant that's covering it. But Seeking Alpha analysts, they have covered it. And they rate it a buy. Okay, there's 2 analysts that have covered it, and you can scroll down here and look. This one was just on September 4th. Changed since this report was written, 71%. That's just September 4th, 71%. And you can find out all about the financials. I was looking at this, 66 million trailing 12 months in revenue. We look at the summer, the market cap is 1.33 billion. Okay, here's the thing that you have to know on this. it has very little cash. Super little amounts of cash. Okay, when we look at the profitability, I think it's cash from operation, cash per share, 9 cents. 9 cents per share. Okay, that's not a lot of money. This is an expensive business. They will need to dilute. So for me, it would absolutely be a trade. It's a Canadian stock. It's on the Canadian listing right now. It may get moved to the NASDAQ. If you see it move to the NASDAQ, it might absolutely start to pump. So it's one you want to put on a watch list. And if you want to take the risk, go and get it. Okay, it's about risk reward. You're going to need to do the research. And if you want to trade it in a TrendSpider, KRKNF. Let's just look at it. I haven't looked at it. KNF. It's not in there because it's a Canadian stock. But you're going to have to do the research on that one, understand it, find it. I like the pitch. Go and read the pitch. I'll put it in the newsletter today. Another one that I love the pitch on, and I'm afraid that I may have missed it, but I don't think I've missed it because I think it's still cheap. It's an AI utility play, and Daniel Newman has been all over this one. He's been all over a lot of these. But CIFR, CIFR. I think that's how you say it. CIFR Mining. Look at this one. Since August, $4.83. You're at 17, almost 8. You're in pre-market, you're at 18.50. 18.50. Okay? $18.50. You had the golden cross of the 50-day. If you were just trading this on a technical standpoint with the 4-hour, you had this nice golden cross right here, which would push me into this stock at $4, got you out with a 48% gain. Boom. You didn't live through that complete downturn, just a little bit of it. You got back in at $4.83, and you're on this run. You're on this run. And FYI, let's just look at, that's a 266% run in 57 days. Just look at some of this, okay? Market cap, $5 billion, $1.3 billion in cash. They have no debt. Megawatt deals, 150 to 300, signaled 13 to 33 billion. Private program, 56 megawatts. I have no idea what this means. Load it into AI. See if you want it. There's another one here. The CEO of CIFR is literally telling you, hold strong, be patient. They just raised like $2 billion. There's a potential move from $5 billion to $30 billion. CIFR, let's look at it. Let's look at some of the fundamentals of CIFR. Because right now it's got a $7 billion market cap. Okay, $7 billion. The valuation stretched. It's a D. Their PE going forward, you're trading at 50 times forward earnings. Now their growth, phenomenal. Phenomenal. Profitability, not that great. Not that great. Their gross margin is 21%, but their momentum is fantastic. But the revisions, again, there's 3 analysts that cover this that are up, 6 are down. So they're revising things down. That's not good. That's not good. Wall Street, their price target, $16. You're trading at $18 in pre-market. Do you want to get this one? I would add this one. For me, this would absolutely be a trade. I don't want to buy it at $18. Its 52-week high is $18.18. The market hasn't opened up yet. I would like this one at 16 minimum. Or I said 16 maximum, I should say. That's where I would look to be adding to this one at 16. Because what do? I just go over here and I say, you know what? The previous high right here at 1554, that's where I want to see it pull back to. If that puts a support level in, if you see a candle pull back, I can start adding to that one. Okay, this purple line, the TrendSpider, I've never looked at this one, but this is kind of where they think that it's going. It's kind of AI. It's in there. But this one very well may wind up on my November watch list. It's one that I've been looking at. I've been reading about. I like the hype, but I'm also practical. I'm not a guy who's going to go into something that is just hype. And if I do, it's going to be a trade and it's going to have some tight restrictions on it. Now let's talk about one that I said that I was feeling good about. This was Delta. Now Delta said, hey, our planes are packed. we're gonna up our full year outlook. Blah blah blah. Free cash flow, fantastic. I want to point out something that maybe some Seeking Alpha subscribers don't know, but you can click on this earning call insight, and it pulls up all of these earnings calls. It's an AI summary of all of these earnings calls. If you just put in a symbol, you can look it up. But let's look at Delta real quick, because Delta on Wall Street, there are 22 analysts that cover it. 17 of them say it's a strong buy. They actually have a price target of $69. Does that make sense? Well, valuation's not super stretched. I'm not a huge fan of airlines, but it's not stretched. Their revenue growth year over year is 4%. Their levered free cash flow, unbelievable, 20,000% gain. There's something funky going on there, but their profitability is fantastic. You're paying for airline tickets, and you're paying a premium for Delta. Their momentum, fantastic. Their 9-month performance, not great, but their 3-month performance, 17%, 34%. Again, this is a freaking airline. And like I said, analysts are bringing their estimates up. So let's go look at it from a technical standpoint. Do you want to buy this one? Well, Delta Airlines trades really well in the 4-hour. I had mentioned this prior to, back on Monday when we went over this, that, hey, Thursday morning is Delta earnings. And they're going to have the earning, $57. And I said, probably a pretty good bet. You're at $59 right now. But FYI, yesterday during the market, it got to 62. Now, what's ironic about this is that if you just look at this and you were to put a line here, 63 might be the top, the most recent top of what you're doing. But if you go back here to February of this year, we were at 68. Does the risk reward match what you want? For me, I'm not huge on airlines. I don't want to chase something. I don't fly Delta Airlines all that much, even though I'm in Atlanta. Not my thing. But if I were trading this, I would absolutely trade it on the 4-hour. Why? The 4-hour algorithm makes you 115% versus 62%. It provides me some safety, some knowledge, knowing, there's never any guarantee of your future performance, but it provides me some internal, psychological comfort. And again, TrendSpider's on sale. Makes sense to get it while it's on sale. Sign up for an annual plan. Get the 4-hour. I trade on this all the time. It's my comfort. And I'm going to give you one that I missed completely. And I didn't like this one. When it was at $5, I didn't like this stock. Applied Digital. They blew it away. 84% jump in revenue. It's up 27%. It's up 30% in pre-market. And these things changed overnight. So it's now a D on valuation because it's gone up so much. Wall Street has it as a strong buy, but their price is 27. They will start bringing that up, by the way. They absolutely will start bringing that up. Now, the growth is phenomenal. Again, EBITDA growth going forward, 113% is what they're estimating. This over 6 months is up 430%. Again, 6 months. In 1 month, you've doubled your money. It's an amazing, amazing stock. And again, it's earnings related. APLD, let's go and look at how the 4-hour algorithm does on this one. It does well, 127%, but if you bought and held, you're up 349. It got you in before earnings at $16. You're trading at $37. That's more than double. And when did you buy? September 10th. 1 month ago. Again, 100%. You're there. Again, I mentioned yesterday in the podcast, what's the one thing that could bring this market down? It's earnings. We've had a couple of earnings so far. Next week is the big one. So watch out for today. Today in Seeking Alpha, you're going to get the Catalyst Watch. It will be all over here at 3 o'clock today. But so far, earnings are showing that they are coming in super, super strong. Now, one other thing that I love about Seeking Alpha Fridays, you get the weekly trivia. And I got 8 right today, 2 wrong. Last week, I think it was perfect. I think my average is somewhere around 7. I got 2 wrong today. Go and take it. I'll put it in the newsletter, the link for it in the newsletter. But if you're interested, I actually like it. It's kind of something nice. Now, I want to point this out too. If you just go and look, Google TrendSpider blog, you can find all of this blog, and it's a great blog to actually sign up for. They have a ton of newsletters that they do where they give you technical analysis. And the biggest thing that you could do this weekend, say you're just interested, you don't want to sign up for TrendSpider, but you're interested in learning. They have a TrendSpider University. This is all free, by the way. This isn't paid for. And this TrendSpider University, it teaches you technical trading, and it teaches you about the product. Take an hour of your time this weekend, okay? Rather than going and watching a Netflix show, watch some of this stuff. Educate yourself. If you don't understand technical trading, understand that I was not a huge technician up until 2020. And what happened in 2020 was I retired in January of 2020 from the grind. I had enough money and I said, you know what? I'm walking away. I wound up losing 45, close to 50% of my actual portfolio, brokerage and retirement by the month of March. Again, in 1 month. I was down that much. It was that much of a shock. I had used charts before. I wasn't heavy into charts. And what I did was specifically on Apple, because Apple was my largest position. And I said, you know what? I want to avoid this in the future. And you can see 2020 right there. This is 2018, sorry. 2020 right here. It just dropped down. Let's put it into perspective from the top to the bottom. You're down 32%. I mean, I've lived through other drawdowns in Apple. That one hurt because I retired. And when I retired, I said, you know what? I don't want to live through that again. I want to have some type of certainty and some type of comfort level in that when someone tells me to get out, I know exactly what the back-tested strategy does. And so I built this strategy around Apple, around Microsoft, around Amazon, large cap tech. It works for many, many stocks. Specifically with Apple over the last 24 months, it makes you 29%, whereas buying and holding makes you 46%. So am I selling and buying based on this? No, but I use it as a guide. When it told you to buy here at $239, I had said, hey, that's a old resistance point. I sold some here. I didn't buy, I trimmed. But you know what? Here on this dividend date right here, right after it got 218, I bought, my reinvested dividends, which is $5,000, $10,000, somewhere in that neighborhood. It's a lot of freaking money, and it's a big position, and it just goes in there automatically. And so when I trim this stock, I am trimming stocks that I probably bought in 2006, 2007, where it's at literally, if we just go back here, and we look at this stock, what was it trading for in, let's just go back January 2006. The stock was trading for $2.74. So do I care if I'm selling at $240 versus $260? No. I'm trimming it. I'm not getting rid of my full position, but that's me managing my portfolio. And remember, this podcast is about my portfolio. It's about how I look at the market. It's how I look at opportunities. It's not about you. I just give you the opportunity to see my process. And my process is pretty good. Again, I've been retired for 5 years. I've got more than enough money to live on. I'm perfectly comfortable. I'd make more money trading. I just like providing and going over this. I would normally spend an hour a day just going over this. I spend 4 or 5 hours because I've got to produce the show. I do all my research, then I got to produce the show, then I've got to write the newsletter, I've got to do all of that stuff. So it is almost like a full-time job. But I do it for the benefit of people, and I get emails all the time. You don't need to email me. You don't need to thank me. I think I do a good enough job that hey, you making money is enough, thanks. But again, if you want any of these tools, I don't care if you sign up for them. But if you want them, the two that I would personally go for, the first is TrendSpider. Choose whichever level of service fits within your budget. Don't go for the $117 a month if you can only afford $41 a month. Okay? Do not do that. But if you think and you logically put it in your mind that I'm going to sign up for this for a year and do 52 training sessions, 1 hour per week with a product expert, and I'm going to learn about technical trading and they're going to teach me about the platform. If you think about it that way, that 117 is a freaking bargain. Because name another professional service or some type of skill that you can learn for like $20 an hour. That's it. I mean, again, that's what the first tool I would go for. The second tool I would go for, and I'm not selling you on the pro. I make more money if you go with the pro. I would sell you on this one because this is the one that I've been successful with for 5 years now. Again, with these tools, I've been retired and I do less work than when I was actually working a job. I used to do a lot more of research and charting and things of that sort when I was actually working a job because I had Fidelity Active Trader Pro. I couldn't do all the things that I can do today in TrendSpider. And I didn't have the great tools like Seeking Alpha and Alpha Picks. So if you're interested, sign up. If not, just go and find tools. Again, you have AI. I told my friends the other day, every day I go to the gym, I have a conversation. I have trained Grok. I have loaded up my podcast. And so Grok knows about my podcast. I ask it, tell me one thing I don't know in the market. And sometimes it's good. Sometimes it's bad. Sometimes it's shit. But I have that conversation with AI. And many times I learn things. So I will talk to you on Monday. Look for the Steve Kress interview at some point this weekend. If you're interested, you're free to write to me. You're free to contact me. I hope you enjoyed the show because I got to go back and nap. I'll talk to you Monday. Bye.
Every morning I wake up to the sound of the trading bell.